Hi, Kelly Eckholt here to update you with the key events of the week. So we had a bit more going on this week with the release of Stats NZ's inaugural monthly CPI indicators, as well as updated reads on electronic card spending and net migration. With respect to the monthly CPI indices, there's been a bit of talk in the last few months in New Zealand about the absence of a monthly CPI. So Stats NZ has looked to move to fill that gap by releasing more of the monthly information they collect to update the quarterly CPI. That's good news for us economists because it helps us refine our CPI forecasts, in particular considering that these monthly indices comprise some of the most volatile items in the CPI. That data did indeed show that those volatile items are disinflating a bit faster than we or the Reserve Bank had expected. In particular, items like food, fuel and international airfares all showed significant drops in the level of inflation. This reflects a few factors, including better climatic conditions, increased competition in the international airfare space as capacity increases, lower international commodity prices, and also potentially some weaker demand out there in the economy. And with respect to that demand picture, we certainly learned from the electronic card spending that retailers are still seeing pretty weak conditions, indicating that consumers are still keeping the purse strings pretty tight. All of that will mean that the Reserve Bank should be pretty comfortable with interest rates at around the current levels for the time being. On the stronger side this week though, we did see some stronger data from net migration and rents. Net migration hit another new historic high and rents inflation was also fairly strong. All of that's consistent with the idea that this strong population growth we're seeing is filtering through to the housing market and to the demand for accommodation. We think those factors are going to keep the Reserve Bank on their toes for a while yet, and as a result we still see a chance that next year that they'll need to increase interest rates a bit further. I'll be back to update you again next week.